Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap. And we've got U.S. stocks rising overnight, posting gains in a bout of choppy trading as investors weigh the latest earnings from the big tech names. So looking at the three benchmarks, we've got a Dow popping 170 points or 0.4%. Closing at 44,882. We've got the S&P 500 rising 0.5%, the outperformer to 6,071. The Nasdaq Composite squeezed out a gain of 0.3% to 19,682. Stocks trimmed their gains late in the session after President Donald Trump announced his intention to slap 25% tariffs on goods imported from Canada and Mexico. For more insights, we are joined by Sonu Varghese. He is the Vice President and Global Macro Strategist at Carson Group. Sonu, how are you doing today? Thanks for joining us.
Thank you for having me, Ryan. Nice to talk to you again.
Great to have you on, Sonu. So we've got a lot to play out and to watch out for in the coming year, actually. So let's start with how things have been playing out in the past session. A lot to chew on. We've got Donald Trump in the mix. We've got earnings as well. What did you take away from the latest market action?
One thing that was positive was that we saw some broadening out of the rally. And especially just this last session, we saw small cap stocks, mid cap stocks rise ahead of, the large cap names and tech names. Value stocks that are typically cheaper in terms of valuation, also gained. So that was positive. So we have been in the camp that we will see a broadening out of the bull market that started just over 2 years ago. So far, it was tech that was driving a lot of it, not all of it. But now we think, that participation is going to broaden out to, like I said, small companies, mid-cap companies, value stocks, financials, things like that.
Yeah, Sonu, how much does that speak to the strength of the U.S. economy in view of how the Federal Reserve did not cut rates?
I think it works in tandem, right? Part of the reason they're not cutting rates is because the economy is strong. They believe maybe inflationary pressures haven't gone away completely. And to that, even yesterday, they hit the snooze button on rates, right? They're going to pause maybe for an extended period of time. And two reasons for that, and both leaning towards that pause. And one reason, obviously, being they think the labor market is solid. We saw initial claims for unemployment benefits come in today. That was really low, so that's a positive sign. There aren't too many layoffs in the economy. So they're comforted by that. And on the other side, they said inflation remains somewhat elevated, which is a different tune from their previous statement at the December meeting when they said that inflation is progressing towards their 2% objective. So it's a slight change in tone, but that would explain the pause in rate cut.
Yeah, that pause coming after the central bank cut the rates 3 straight times and last year. When do you see them starting to move again, especially with the pressure coming from Donald Trump?
I think that's actually a very good point, because what was interesting is Powell in his press conference, he was actually, despite them putting out in the statement that inflation remains somewhat elevated, Powell was very optimistic about the inflation outlook, saying, he expects better numbers in the first quarter of this year, and he expects inflation to continue decelerating towards their target. So then that begs the question, wait, if you also think all that is happening and you don't want the labor market to weaken further, and you think rates are meaningfully restrictive, why aren't you cutting rates now instead of later? And it gets back to what you just said. There's a lot of uncertainty around the new administration's policy around tariffs, regulatory policy, fiscal policy, all of that. So that's what's preventing them from cutting further, and which means they're going to wait a while we get some clarity on what's happening with policies, especially related to tariffs. So we don't see them moving before June, to be honest, Ryan.
All right, let's take a look at what's been playing out in the earnings. And off the top of the list right now is Apple. They've just announced numbers that beat expectations to some extent, but China's sales was quite weak. So looking at those numbers, there are a couple of things to unpack here, especially with the view of how tariffs and the US-China trade war could play out. What do you take away from the latest numbers? Apple missing on China, but overall revenue still rising. So where does it go from here?
In a sense, this is not entirely a surprise. We knew that given the restrictions, the climate around everything that's happening between U.S. and China, Apple may struggle to sell more of their iPhones, especially when it's in competition with Huawei. And, but I think forward guidance at the end of the day, look, a lot of the sales happen in the U.S. as well. U.S. economy is solid. And as I speak, I think, the share prices have rebounded. This is obviously aftermarket. So there is that as well. So I think guidance is still fairly positive.
Okay, they are also playing up the Apple Intelligence feature, which is all around AI. Of course, AI has been quite in focus this week with DeepSeek. That's been rattling markets. What do you make of the reaction so far around how folks have been selling off to some extent with the, I guess, cheaper, more, I suppose, efficient version of DeepSeek, just making people question their valuations around the big names?
I'll take 2 points related to that. One, it's a reminder that you don't want to be too concentrated when you invest. If you just invest in the S&P 500, you're getting 30 to 40% technology names and technology adjacent names. Do you need more than that? We think not, especially since, as I mentioned, we think the bull market would broaden out beyond technology names into small caps and mid caps. And to that end, I think the AI news in a sense was positive for everybody else, because the fact that it becomes cheaper, irrespective of whether it comes from China or wherever, it's going to diffuse into the economy a lot more and faster as well, right? And simply because it's cheaper. And that's going to be positive for overall, for the overall economy and really probably the global economy for that matter. So we look at it as a positive. And on the other side, even like Apple just talked about their AI capabilities, we think even the big names in the U.S. are going to grow their CapEx spending, right? Because right now they're not going to sit back and wait. They're going to, in fact, they'll have more fire in their bellies thinking, oh, now we may have to spend even more so that we stay ahead of everybody else. So, and CapEx spending is good for profits across the economy as well. As I always say, one person or one business's spending is another business's revenue and profits.
That's a good point, Sonu. So looking at what we've been seeing in terms of the potential broadening of the rally, where are you looking at in particular? We've been seeing Donald Trump play out a few sectors, especially in energy, oil in particular. Where are you optimistic for the rest of the year?
We're mixed about energy because, both headwinds and tailwinds potentially. Regulatory easing, if that promotes more supply, obviously that puts some downward pressure on prices. But on the other hand, tariffs, say if you put tariffs on Canada and Mexico, the U.S. gets a lot of oil from both of these countries. So that could increase the price of oil. Oil is a globally traded commodity. So we're kind of neutral on energy. We're not that positive on energy itself, but we are positive more on the cyclical sectors, other cyclical parts of the market, including financials. We like some industrials. We actually like communication services as well. And then in addition to that, small caps and mid caps too, as I mentioned.
All right, lots of opportunities in the market if you know where to look. And helping us out this morning is Sonu Varghese. He's the Vice President and Global Macro Strategist at Carson Group. Sonu, always a pleasure chatting with you. Thanks so much for your time and insights.
Likewise. Thank you so much for having me.
All right, looking forward to having you back again, Sonu. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.